In 2013, a broker in London reported that one of its customers had the highest trading volume for 8 straight years. That customer was Paul Rotter, a successful scalping trader who averaged trading 3 million lots every month and made between $65 to $78 million annually. Paul Rotter's trading success began when he and his friend Kinski started a financial firm called Greenhouse. With an initial investment of $526,000, Greenhouse made a profit of $6.5 million within just 3 months. Paul Rotter's scalping strategy is a great example for all scalping traders. If you want to achieve success like Paul Rotter, this video will show you 5 top scalping strategies that you can use and develop to reach your own trading goals. And it's totally possible that you could be the next Paul Rotter. Hey guys! Welcome to our video on the 5 best profitable scalping strategies for serious traders. These are the techniques that can really boost your trading success, used by top scalpers to get amazing results. That's right. These top 5 scalping strategies aren't often taught to beginners. So in this video, we'll give you a clear step-by-step guide on how to trade effectively in Forex, stocks, commodities, and other markets to make the most profits. By the end of this video, you'll know exactly when to make high-probability trades using these 5 scalping strategies. And it's totally possible that you could be the next Paul Rotter. First, RSI Trendline Break Price Action Trading. This is a simple yet highly accurate scalping and swing trading strategy. The key to success with this method is carefully analyzing the natural RSI trendlines without forcing them. This is a crucial rule in RSI Trendline Break Price Action Trading. Price action rules are designed to help us make money and become better scalpers. If you take a trade every time you see an RSI trendline breakout, you might not always get the results you expect. We use RSI trendlines to support our price action analysis. So, you need to analyze the price, draw key support and resistance levels, identify the main trend, and then look for RSI trendline breakouts that align with the main trend. Here's a common mistake. Many traders use RSI trendline breakouts as reversal signals. For example, they see an uptrend, spot an RSI trendline breakout, and then go short. This can work sometimes, but it's not the most reliable method. We take a more conservative approach. In an uptrend, we look for RSI trendline breakout signals that suggest buying opportunities. We focus only on signals that align with the main trend and avoid those that suggest short trades. Let's check out the next examples. In this bullish chart, we saw some RSI trendline breaks. Using the trendline gave us a clear signal that a trading opportunity was coming up. The RSI trendline breaks provided buy signals a few candles before the actual price movement. In another example, we can see how a short setup looks. The price is making lower highs and lower lows, indicating a downtrend. We added a price action trendline and spotted the RSI trendline breakouts. For setting a stop loss, a common practice is to place it above the candle where the RSI broke its trendline. So, for a short setup, we would set the stop loss above that candle. If you want a clearer view of the trend, adding a long-term moving average can help. Take trades in the direction of that moving average. From these examples, you can see that RSI trendline break price action trading is an easy-to-use and profitable strategy. If you use it consistently for scalping, you'll likely find it's a quick and easy way to make profits. Understanding RSI period settings. The RSI, Relative Strength Index, usually comes with a default setting of 14 periods. This means it looks back at the last 14 bars on your chart to calculate its value. While 14 is the standard setting, it might not be ideal for your trading. Short-term traders often use a shorter period, like 9, to capture quick market movements. On the other hand, long-term traders might prefer a longer period, such as 21 or even 50, to smooth out the data. You can adjust the RSI period to fit your trading style. A shorter period makes the RSI more sensitive, while a longer period makes it less sensitive. Be aware that using a shorter RSI period on lower timeframes can lead to many false signals because the indicator becomes more sensitive. So, you might want to use a higher period RSI for backtesting on smaller timeframes. For a clearer analysis with less noise, stick to higher timeframes. Here, you might use a shorter RSI period for more trend line opportunities or a longer period, like 21, for a smoother approach. The key is to test different settings and find what works best for your trading style. Strategy number 2. Heikin-Ashi Smoothed and RSI Divergences Trading. This is a highly accurate scalping and swing trading strategy. It uses 3 different technical analyses, each with high accuracy. When you combine these 3 reliable signals, you can trust that the trading signals you get will be very dependable. So, first, how to use the Heikin-Ashi Smoothed Indicator. The Heikin-Ashi Smoothed Indicator helps traders spot market trends. A key rule is that trends often change when you see 2 or more Heikin-Ashi smoothed candlesticks in the opposite direction or color. This can signal when to enter a trade in the new direction or adjust your stop losses. Essentially, the Heikin-Ashi Smoothed Indicator works similarly to using 2 moving averages. You get bullish or bearish signals when the moving averages cross. A bullish signal occurs when the short-term moving average crosses above the long-term moving average, known as a golden cross. A bearish signal happens when the short-term moving average crosses below the long-term moving average, called a death cross. But remember, relying on just one indicator won't give you the full market picture. This applies to the Heikin-Ashi Smoothed Indicator too. It's a good idea to use other indicators, like RSI and the Stochastic Oscillator, to get a clearer view of the market. In this strategy, you'll use the RSI to spot divergences. I'll show you some examples of how to do this in just a moment. After you find the divergences with the RSI, you'll use the Stochastic indicator to get your entry signals. The 200-period smoothed Heikin-Ashi will help you identify the trend. Let's check out some examples. First, we need to spot divergences before considering any entries with the Stochastic indicator. Here's how to do it. Look for higher lows in the price. Then, compare these lows with the RSI to see if there's any hidden divergence. For instance, if the price makes a low, and the RSI makes a lower low while the price makes a higher low, that's the divergence we're looking for. That's called a divergence. You can draw it out to make sure you've spotted it correctly. Look for a higher low in the price and a lower low in the RSI. Once you see this bullish divergence, wait for the Stochastic Oscillator to cross up. That's when you should consider taking a long entry. The 200-period smoothed Heikin-Ashi also supports this setup. Make sure the price is above the 200-period smoothed Heikin-Ashi and check for a cross-up on the Stochastic Oscillator. When you see these conditions, the current candle is your buy entry. Go ahead and place your buy order on that candle. Place your stop loss just below the nearest swing low. For your profit target, aim to make 3 times the amount you risk. Now, let's check out some more examples. Here's how to spot hidden divergence. First, look for higher lows in the price. Then, compare these with the lows on the RSI. If the price makes a higher low while the RSI makes a lower low, that's hidden divergence. Draw it out to make sure you've spotted it correctly. Higher low in price and lower low in RSI. Once you see this hidden bullish divergence, wait for the Stochastic Oscillator to cross up. That's when you should consider taking a long entry. Make sure the price is above the 200 smoothed Heikin-Ashi and check for a cross-up on the Stochastic Oscillator. Both of these indicators should confirm your trade setup. This candle is your buy entry point. Enter your trade on this candle. For your profit target, aim to make 3 times the amount you risk. Strategy number 3. Awesome Oscillator Trendline Cross. This strategy helps us avoid choppy markets and lets us capture gains before confirming a break of the zero line. Long setup. First, the Awesome Oscillator shows 2 swing highs above the zero line. Second, draw a trend line connecting these 2 highs, extending through the zero line. Third, buy when the price breaks the trend line. In the example shown, by entering a trade when the trend line is broken, you can benefit from more gains before the price crosses above the zero line. Make sure the downward sloping trend line is drawn using 2 swing points of the Awesome Oscillator, with the second point being low enough to create the trend line. Bearish setup. First, The awesome oscillator shows two swing lows below the zero line. Second, draw a trend line connecting these two lows, extending up through the zero line. Third, sell short when the price breaks the trend line. In the example provided, the trend line was broken at the same time the awesome oscillator crossed below the zero line. Strategy number 4. EMA Scalping with MACD filter. In this strategy, we use the MACD indicator along with the 5, 8, and 13 EMA lines for scalping and intraday trading. The EMA lines work just like they do in long-term strategies. This approach is effective on any timeframe chart. Bullish trade setup. Enter a buy order when. First, the EMA lines show a bullish crossover, shorter EMAs cross above the longer EMAs. Second, the blue MACD signal line crosses above the red signal line, and both lines are moving up. Third, the MACD histogram bars are above the middle line. This indicates that the price is rising and it's a good time to buy. Set your initial stop loss below the most recent swing low. Close the buy position when. First, the MACD histogram bars fall below the middle line. Second, the red EMA line, 5 EMA, crosses below the other EMA lines. This strategy helps you take advantage of short-term price movements and trends. Bearish trade setup. Enter a sell order when. First, the EMA lines show a bearish crossover. The shorter EMA lines cross below the longer EMA lines. Second, the blue MACD signal line crosses below the red signal line, and both lines are moving downward. Third, the MACD histogram bars are below the middle line. This signals that the price is likely to drop, making it a good time to sell. Set your initial stop loss above the most recent swing high. Close the sell position when. First, the MACD histogram bars move above the middle line. Second, the red EMA line, 5 EMA, crosses above the other EMA lines. To make things easier, I've included a template in this video that you can upload to your chart. It will automatically plot all the indicators for you, so you don't have to do any manual setup. Check the description for the download link. Strategy number 5. Integrated CCIMACD trading strategy. Let's wrap up by looking at the CCI strategy. It's a bit more advanced, but it works well for both beginners and experienced traders in forex and stock markets. This strategy is powerful and reliable, and you can use it for scalping, intraday, and swing trading. Beginners will find it easy to follow with its clear entry and exit rules, while pros can tweak it for even better results. Just use the default settings for the CCI and MACD indicators. For buy orders, follow these steps. First, the MACD histogram is above zero, showing a bullish trend. Second, the CCI moves out of the oversold zone and goes above -100. Third, place a buy order with a stop loss set below the nearest swing low. For sell orders, use these conditions. First, the MACD histogram is below zero, indicating a bearish trend. Second, the CCI moves out of the overbought zone and falls below +100. Third, place a sell order with a stop loss set above the nearest swing high. This strategy works well for both forex and stock trading. Of course, you can adjust these settings on your trading platform, as this indicator is available on all trading platforms. Or if you want to have the exact settings as shown in this video, you can download them in the description. In this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so you don't have to worry about anything. Get the download link in the description. Check out more examples of the integrated CCI-MACD trading strategy to get a better grasp and make the most of it. as always. If you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or X to show your support. See you next time.